Okay, so today I want to talk about auto loan interest rates and payments. What I'm going to do is show some examples of what your money buys you in terms of a payment. Going to also show what the different term options do, as well as cash down versus no cash down, to give you guys a sense of how much you can buy down your interest rate and also buy down your monthly payment. So I've got four scenarios queued up here. I've got a new car and a used car. Now, what I've done here is asked our credit union partners to give us their best rates back. And that's what we do at the brokerage when we look for bank rates for our clients is tell them, "Hey, we've got this year car, this much loan to value and this term. Give us your best rates." And so I'm going to show you what the rates are looking like as of May 2023. The first scenario is going to be a brand new car. If you finance 100% the value of that car, we're going to use a $50,000 figure to keep it nice and round. And I'm going to go over the three most common terms. One's the 60 month, that's a 5-year loan. And currently, the Credit Union of Denver is offering a 6.48% APR for a 5-year loan at 100% loan to value, which equals a $980 payment. Moving to the next term, we have to go to a different credit union, which is Canvas Credit Union. And they're only like a tenth of a point away to go the longer term. So this is why it helps to shop around, because not much difference in rate, and the payment goes down into the 845 range just by finding a different bank. Now, if you need the longest term possible, that's an 84 month, and 749 is the rate there. Now, that's very common. Going from a 6 to a 7-year loan typically will add a 1 percentage point increase in the buy rate of that, but you can get that payment down into the sevens by going to that 84-month term. Now, next scenario is going to be the same car, same sticker price, but with a 20% down payment. So we've got $10,000 down on the cash down line there. You can see that. And you have already, let's just do this apples to apples math, a 3/4 point discount by putting 20% down. So 10,000 out of your pocket, 3/4% discount on the rate, and your payment goes down $220 in that scenario. So that's the power of cash down. Less to finance, less APR. I think it works great with that scenario there. So best rates we're seeing right now, high fives. Now, I have some thoughts about going outside of the credit unions, which I'll share with you at the end of the video. Let's move on to the used car. So let's say $30,000 for both scenarios. Same rates across the board, we're finding. So this is interesting. Many banks will increase the rate they offer when you start moving back model years in the car world. Now, credit unions don't do that until it hits, I think, 8 model years back or a certain amount of miles. So if you're looking at a 1, 2, 3, 4, 5-year-old car, this will work great. And that's really where the sweet spot is, I think, for credit unions. So with the used cars, I'm going to do the 72 and 84 month terms with the same two scenarios. So you get the same-ish rate with the used car, 72 months, 6.49%. You put nothing down, 100% loan to value. 505 is the monthly payment there. And if you put $6,000 down, 404 is the monthly payment. So you can drop your payment by $100 with a 20% down payment there. Moving on to the 84-month scenario. Same rates, 7.49. And there is, by shopping around, a 15 basis point discount, 734, if you go with 20% down. So, oops, we need 84 months. There we go. So now you can see the swing. Now you've got a payment down in the mid 300s on a $30,000 car. So with the credit union program, like I said, it really works great with used cars. But what if you're trying to get the lowest possible rate on a brand new car? That may not be, or these banks, these credit unions may not be the best fit for that. We've got, and I've seen banks starting to compete on our business now in the mid and the low fives with the correct cash down scenario, the correct car. You can do something like this scenario where I believe if we're putting in the 70% loan to value range, something like a 5.5% rate for a brand new car, and that'll get you into the high 600s. So it helps to shop around. It's one of the services we have at the brokerage. We figure out the best scenario for credit profile, the car, and the structure. And so hopefully that helps understand a little bit better about how much your money buys you for a used car in May.